Good evening and welcome to The Square. Tonight is a very timely and important discussion. We're going to look at the financial landscape in Rwanda and examine current innovations that are underway, currently spurred on by the COVID-19 pandemic in Rwanda. We're also going to look at how fintech can help businesses better access the Economic Recovery Fund. As many of you know, this fund was put in place by the government to really help private sector firms that were affected by the COVID-19 pandemic. And with us we have our guest, Mr. Norman Haguma, who it's not his first time on the show, who is the country manager of Spen Rwanda, as well as the chairman of the Blockchain Rwanda Association. Norbert, great to have you on The Square once again.
Thank you for having me.
Great. My name is Dan Mpisi, host of The Square. As always, I'm joined by The Square resident panelists. And Charles, I'll start with you. Great to have you. Charles Harbour.
Samia, Dan, how are you?
A great member of The Square. Great to have you.
Samia.
We're also joined, as always, by Brenna Namata. Brenna, great to have you on the show, as always.
Thank you, Dan.
Great. Before we do, like we always, before we kick off, like we always do on the show, we want to share some midweek highlights by the Square resident panelists. Charles, is there something that's caught your attention you'd like to share with the viewers tonight?
Earlier this year, there was, when the Pan-African movement was celebrating its annual day, the theme was silencing the guns. And we did have a show actually here on the Square around that. It's extremely unfortunate that when you look at Ethiopia with the situation in Tigray, the extremely unfortunate events that are happening in Uganda at the moment around the presidential campaigns, that violence is still a way of going about business in Africa, and more so close to our region. So, some of these theoretical phrases we come up with, silencing the guns. I mean, where are all these regional and continental organs when the guns are being cocked? So I am extremely concerned by that. Yeah.
Sure. Brenna?
Yeah, I think we should not take the stability that we continue to enjoy in Rwanda for granted. Stability and also the progress we've made around COVID. Because if you look at the region right now, the COVID numbers are going up, and then you have the instability. And that is a problem for the region. It's a problem for growth because it essentially raises the risk profile of the region. So I hope that sanity will prevail and our leaders will try and do everything they can to lower the temperature. Because, I mean, we were just talking about it, 2020 is already done. So by now we should be looking at the year ahead. But if you look at the region, it's not looking good. So something has to happen for the temperature to come down.
Absolutely, and like you said, we absolutely cannot afford to have, this double issue of dealing with the pandemic as well as regional instability and violence. So absolutely, I really hope this is something our leaders will really make sure that something happens before the year ends and this doesn't spill into next year. So back to the discussion on hand tonight. We want to understand fintech, financial technology, and with us we have Norbert Haguma. If you could just have him on the screen. We didn't have him when we began. Norbert, great to have you back on the Square, and you're here in your capacity as the country manager of Spen. And just to kick off the conversation, we want to understand the financial landscape in Rwanda. The COVID-19 pandemic has created new opportunities for innovations in fintech, especially to do with social distancing and the reliance now on technology to enable financial inclusion and promote economic growth in general. So if you can briefly tell us what are some of the latest innovations in fintech in Rwanda that have been largely brought about as a result of the COVID-19 pandemic. In many areas, we keep on saying this on the show, the pandemic has fast-tracked or spurred innovation and creativity. So if you could just share with us some current interventions or innovations in this field.
Thank you. So first I want to thank you for having me today. I think that for 2020, it has been a quite transformative year for the fintech industry. I would not say that there's been that much in terms of new technology being introduced or new innovation, but more about the adoption, really, which has been very widespread. So the first thing to talk about is the cashless transactions. If you remember, in the beginning of the COVID pandemic, the central bank introduced facilities to allow people to send and receive money and accept payments, which was very popular. Following that, we also saw an increase in online payments. So more and more companies went online, selling products online. We saw a tremendous increase in e-commerce as well. Of course, payment is a big part of that. So I think what COVID-19 showed to the general public in Rwanda is that using fintech, financial technology to make payments, whether online, is safe and is reliable and sustainable. And this, I think, is something that is going to stay with us for the long term. But another aspect that I think was very interesting, especially for us at SPEN, is the integration with other platforms. So we saw, for example, we got integration with Vuba and Diego, and you can now use those services and pay with SPEN, and many, many more.
Mm-hmm. Thank you very much. And before I get back to you, I just want to hear on from Charles and Berna on the question of how can we use. What ideas do you have in terms of digital, technology to really enhance digital inclusion in Rwanda? How can we best use this technology? Especially now, I think what we're realizing is that during this pandemic, we need to think more on how we can best leverage technology. So what are some ideas you have on how fintech can enable better digital financial inclusion, as well as just generally promoting economic performance of the country? Berna, I'll start with you.
I didn't bring my notebook. I feel bad. But just, I think it was yesterday. Yesterday there was a report by IFC World Bank on Africa's internet economy. And it's quite an interesting report. I think anybody interested should look out for it because they've actually assessed the potential on the continent. So they do profile a lot of things around the internet, the capacity around, the potential around whether it's e-commerce, fintech, health, the different, and it's quite amazing the potential of what Africa could actually achieve if they were to invest in and improve what is already happening, the digital infrastructure. Now, coming back to Rwanda, I think what we've seen, what the pandemic has taught us. One, yes, we had people migrate to digital platforms. You had a lot of that, but I think what is clear is that, for instance, the moment MTN reinstated the fees, the charges, then we saw, I don't think the numbers look the same, meaning that most people were obliged to use the platforms, and I think what you need really is to have people adapt out of necessity and also voluntarily, not because they've been forced to, because at some point during the pandemic, we went cashless and it was made mandatory. Yeah, and so I think we still have a long way to go around the charges. It looks minimal, but for most ordinary people, it's still quite a lot. Two, we have connectivity issues. And I'll give you an example. Quite often when you for instance, take a taxi or go to any outlet and try to make a payment, there's usually a lag of maybe 2, sometimes a minute or 2. And if, let's say, you want to make a payment and go out, this person will tell you, no, wait, I need to get my confirmation message. And that really is a disincentive, because no one wants to, if I've made a payment, I want to get on with what I have to do. But most of the time you'll find that someone will be forced to stand there and wait for the confirmation, Yeah, so there's progress, but I think the experts in technology still have a long way to go in terms of making them, one, user-friendly and accessible. Again, because most of it today depends on the quality of the network. Now, I think this week we saw a bit of outrage, the biggest bank having connectivity issues, and
for over 48 hours.
Yes, and it was quite a problem, because there's a lot of transaction, then there were people paying taxes, so it was quite huge. So you have that. Now, unfortunately, when someone experiences connectivity issues twice, then they'll just stay away, Not so many people have the patience to say, let me try it again, or say, they'll probably say, oh yeah, I'm going to Yeah. So I feel there's room to, one, of course, take advantage of the migration that has happened during COVID. But for the people that, are in charge of these networks and the connectivity and the infrastructure, they need to do more, make it more user-friendly, improve the connection. And for inclusivity, I think some of these platforms have to be made available offline, because most of them today heavily rely on connectivity, and we have some places where the connectivity is not there. So how do you make sure that if this person does not have a smartphone, they can still transact, for instance? Yeah, and beyond that, how do you ensure that if someone is accessing the platform, it is possible to build a profile, for instance? What we've seen with mobile money, it's still cash in, cash out, and not so much, for instance, around savings. Why? There are limitations on micro loans, for instance. So there's still room for creativity, in my view.
Absolutely. Charles?
Every crisis creates an opportunity. I think right now this would be the best time to invest in a tear gas factory.
Tear gas of all
very
things.
Good. The market is in the region. COVID. Same story, 2 days ago, I went to what used to be the UTC, that's now Kigali City Mall, and I was with two guests, one South African, one Zimbabwean, and they both wanted local SIMs. And the queue at the MTN service center was winding and unwinding, and so I walked to a phone shop across the MTN service center, and I asked the lady who was there, isn't there another way in which we can get? So to which she responds, of course there is. There are two ways. You can call an agent and he comes and gives you a SIM card. Or let's arrange and you bypass the queue. Now, there was no way one of my guests was going to bypass the queue. He thought it was not the right way to treat a fellow human being, so we got an MTN agent. When the guy came to us, he said, the only numbers I have start with 0788, and the cost for each SIM card is 5,000 francs. Now, I haven't bought a SIM card in a while. I think the last time I checked, a SIM card is probably 1,000 or 500 francs,
yeah.
So it's basically tenfold. So I asked him, no. So the guy looks at me and tells me, how many cards do you want? I told him I want 2 cards. He says, since you want 2 cards, I will sell both of them to you at 8,000 francs. Now, fast forward, we got the SIM cards. We paid him 7,000 francs. But he took advantage of the situation. And then the same applies even to businesses like Spen, who may not take advantage of their clients in a negative way, or the banks or the telcos and what have you. But if it wasn't for COVID and times in which we were, their businesses would not have thrived. So where I'm going with all this is that we have things to thank COVID for, and again, I'll give another example of mine. I did not know that you could actually borrow MTN mobile money. I did not know that I could save on MTN mobile money until, this situation. And, you're using mobile money quite a lot, and then all of a sudden you get an alert, they tell you, by the way, you can actually save, and this is how much interest you get. And so I think those are the positives that they are. But that said, every day is a learning curve, and especially with fintechs, you look at the situation in which we are and you say, fine, we needed a rude awakening to see this opportunity, but then again, what next? How can we propel it a lot further to ensure that even other things like being as paperless as we should be, and so on and so forth, yeah.
Thank you very much, Charles. So Norbert, the question, goes back to you as the country manager of SPEN. What idea, you explained the fintech landscape in Rwanda. Brian and Charles have weighed in on, some of the positives, some of the negatives, have given examples of just recently some financial institutions failing to come through because of, various technical problems. But from your perspective as a country manager of SPEN Rwanda, how can financial institutions best leverage fintech technology to, in this particular case, promote financial inclusion? Not only just being innovative during this period, but also to set in place permanent systems that can really promote financial inclusion. What's your perspective on that, Norbert?
Yeah, I think financial inclusion is not just giving somebody a debit card or a single tool to be able to use. So for SPEN, the way we see it, I think in general even, is that financial inclusion means to give anybody the capacity to not just have money in an app in their pocket, so basically a bank in their pocket, but to be able to send and receive money, to be able to save money, to be able to get paid a salary, to be able to buy things online. So it's an entire ecosystem. So looking at financial inclusion from one point of view only, saying that if somebody has mobile money, then they are financially included, I don't think is the right way to look at it. And the fintech industry, whether it's on the continent or in Rwanda or even globally, can be seen that it's actually a very, very strong industry. There is a thriving industry. Recently, the biggest IPO in the history of the world was going to be done by Alibaba's Ant Financial. Unfortunately, it was cancelled for other reasons. In Africa, we saw Paystack get acquired by Stripe for $200 million. We saw companies like Kada in Nigeria, which is a digitally native bank, also doing extremely well. It's really easy to see that, at least in Africa, the biggest technology company or startups are all fintech related. And the reason why they are all fintech related is because financial technology it really holds the key to much more than just being able to send and receive money. It is more than it is augmenting money. It's like comparing postal letters and email today, and what you can do with email. You can send documents, you can schedule, it's instant. So it's the same thing with money. But from SPEN's perspective, we've always been free. So to send money is free, to receive money is free. So when the central bank imposed free transaction on other players on the market, it did not really concern us. And when these measures were removed, for us, we remain the same. So our philosophy is that your money should not be taxed. We should not be really literally chopping up your money as it's going through us. We think that there are other ways to make money on cashless transactions, and the proof is in the other companies around the world. I mean, Ant Financial or Alibaba in China, Alipay, they don't charge people for sending and receive money. And so we don't believe in that. We don't think that the way to to make money in the fintech industry is by charging a commission, what I consider a tax for somebody to send and receive money. We think there are many other tools that come in handy once you have people transacting monies. So for example, you talked earlier about savings. We actually introduced savings a few months ago in Rwanda because of COVID. We did not, I think it was really prompted by what we saw on the market. We saw that many of our users were having difficulty because of COVID, and they were talking to us about the ability to save even the smallest amount of money. So what we introduced is the most convenient savings approach, which is that it's automated. You don't have to talk to anybody. You save as much money as you want. You can take it out when you want. There is no limit, and there is no lock-in period. So this is really the power of fintech, is that once people actually have an app like Spend in their pocket, this is more than just sending and receiving money, because now what we are looking at, when you asked earlier about the technology, we are looking at ways to have some kind of a credit score for all our Spend users, and working together with our partner bank, INM Bank, we want to be able to offer loans to people based on their transactions. So really looking at the industry in general, it is doing extremely well. I would say that the tragedy of 2020 has in a way empowered the industry. It has shown the necessity for people to be able to send money, not just within one country, but even internationally and without cost. Because once you can once you can send and receive money from one another, you're really removing the borders. So in my opinion, I think, for example, that the African Continental Free Trade Area will not really work unless we have integrated payments, because even if I'm interested right now in a Nigerian musician's album, I cannot really buy it right now from Rwanda at this point. Maybe this is changing fast, but we're still very far from where we should be. So looking at down the road, I think that the development of fintech industry on the continent is extremely positive. Allowing people to pay each other opens up opportunities. So somebody who's based in Rwanda, it would mean that instead of serving a 12 million people market, they will be serving a 1.2 billion people market. But beyond even just that opening of the market is that fintech is a way really to accelerate or to allow people to move into the middle class, because when you give somebody an app like Spend, they are truly banked. So our motto is to bank the unbanked. And we don't see that banking somebody is simply allowing them to send and receive money. It has to be able to do all the other things that allow somebody to build wealth.
Thank you very much. You said something that really caught my attention when you mentioned that you and your team at Spend don't believe in actually deducting money from someone's wallet when they're sending and receiving money. I think it's kind of radical. We are all used to the whole, whatever telco you're using, if there's a digital transaction that's going on, there'll always be costs. And I think what you're talking about is the future and just easing financial inclusion for people, and also using fintech and looking at other ways, other methods of making money than actually putting the weight on the sender or receiver. Before we go to a social media feed, Charles, Brenna, would you like to weigh in on what Norbert just shared?
I think Norbert raises pertinent points, and just especially around the role of the banks, the traditional institutions. So, and they have two simple ways of interpreting or working with fintechs. Do you look at them as competition, or you wake up and style up? Now, obviously, the very easy answer that all of them will tell you is we have to wake up and style up. Whether they are walking the talk is a different conversation. And I'll give you maybe 3 examples. If a fintech, maybe, and I will almost want to not to give an example of Spend if I could, but if Norbert could give us his entrepreneurship journey, I'm sure it wasn't very easy for him just to walk into I&M doors and go into bed with them. And it must have been an extremely tall order, because it's a bit difficult for banks to get out of their traditional comfort zone of saying, how are we going to evaluate this business and support it? How do we interpret IP as an asset? How do we, what alternative collateral do we get from this startup? Because traditionally, fintechs will just, it's somebody's intellectual capacity that you are praising before you go into bed with them, irrespective of the support that you give them. So the traditional way of banks working is not necessarily working pro fintechs. And even if you look at our own market and you look at infrastructure aside banner, you look at the levels of innovation, how many banks in Rwanda have their own mobile wallets? You will receive messages every other day about the push and pull ability from your mobile phone to your bank or vice versa being down. Rwanda Revenue Authority, for crying out loud, told the whole country that we are pushing payment of taxes by X number of hours because the systems were down. So I think the traditional way of, and without pointing to any particular banks, of our banking system is kind of a major hindrance towards the success of fintechs. I think it's largely because innovation is one of the longest journeys that people have to travel. So that is one major hindrance I see in terms of people accepting change. Yeah.
Brenna?
I think we in the media have learned it the hard way, legacy media specifically, because we took long to adapt to the digital space, and it took almost the pandemic for us to wake up to the reality of the digital space. And I think the same will happen, and is happening with the banking sector. Because the traditional way of opening accounts and managing accounts, I don't think will work.
Of literally physically going into a bank,
yes,
filling out forms, that has to change. For
yes,
sure.
and I mean with fintech, some people can afford not to have a bank account and just conduct their transactions without a bank account. So if you're a bank, then you have to think about that, because I think that is going to happen and is already happening. But I'm more worried about the inclusivity of this whole process, because so far you find that, and nobody can correct me, you find that people who easily can access credit on these platforms, you must have a certain income, so it wouldn't be someone who really has, okay, first of all, you don't have a profile, or, yeah, so.
Or you're informal.
Yes, yes. So let's look at the structure of our economy. We still have quite a huge informal sector. So meaning that there are people whose income you cannot track, and there's so much happening informally. So I think the challenge for fintech is how to tap into that, the informal sector, and make services available, and perhaps even migrate them into the formal sector. Yeah. Otherwise, I feel that it will remain, if we don't address how we include and absorb the informal sector, it will remain for a few, because even what we saw during the pandemic, it was much easier for the formal sector to migrate. Mm-hmm. But then again, we know we are predominantly informal. So meaning that we still have a long way to go in terms of inclusivity. The other thing is that the gender dynamic around this. The report I looked at today, still you see that men are dominating, It would be good to hear from Spain if they have any specific products targeting women, because we know traditionally women have limited access to finance. It would be good to see fintech taking up the challenge and trying to address the needs of women. Yeah.
No, but do you want to quickly answer that regarding financial inclusivity, especially in the informal sector, as well as the gender aspect of this?
Yeah, sure. For financial inclusivity, what Berna said is right on when it comes to the informal sector. I can give a few examples, but maybe looking at a farmer, somebody who sells milk. Usually they have a track record of how much milk they've sold on a piece of paper, if they have anything, but usually they don't. So somebody like that, even if they're making more money than the average person in Kigali, will not be considered for a loan because they don't have any proof of the kind of activity that they have. So there are problems that fintech can solve, but there are others that cannot be solved. So if, for example, you have no economic activity at all, it will be difficult for fintech to solve that problem, except maybe opening up new markets for you, which is what we have seen in other places where the fintech technology is more advanced, is that people can pretty much sell anything. Whether you are growing fruits or you are anything, you can add value to it, you can sell it to the world. But of course that also involves another element of logistics that adds or supports the fintech. And at the same time, you see that fintech does solve a problem of people who, so for example, the street vendor or the lady in the market who's doing a decent turnover every day or even every month, but cannot access any kind of financial services. This is something that fintech can solve for them, and this is something that we are already seeing being solved on a daily basis. So when it comes to empowering especially women through fintech, I think there's been quite a good number of initiatives in Rwanda, and for us at SPEN, we work directly with UN Women to implement some projects with that. Especially, we think that there is a vulnerable women, especially in the countryside, who can really benefit in terms of safety and all of that from fintech. But our core offering, which is zero transaction fees, actually is quite popular, especially with the lower income in our market. But I think we need to look at fintech as a tool to empower the whole society, to allow people to really do much more with money than they've been able to do so far. But I also want to touch to the point that Charles hinted at for the informal sector, that maybe some people don't want to use these fintech solutions because of taxes or Rwanda revenue or things like that. I think this is maybe something we'll touch a bit later when we talk about the Economic Recovery Fund. But it is true that this is a very difficult problem. People sometimes are resistant to using cashless solutions, not because of the convenience or cost issue, but because they don't really want to be exposed, so to say, even though when you look at it, Rwanda Revenue does not really care which channel you use to get payment. They will always get the taxes. So there is an element of education that is needed, but I think the best education, as we have seen for SPEN, through, for example, the adoption of SPEN by many motorcycle riders, is that people just don't want to be taxed that commission fee. So especially for the lower income, if I'm making 5,000 Rwandan francs a day, and you take, I lose 250 or 500 just for cashing out, it's a really big problem. So I think our philosophy is what is doing most for inclusion more than anything.
Thank you very much, Norbert. I just want us to quickly go and hear from our viewers on our social media feed. We have the first tweet coming in from Furaha. Furaha Jean-Paul states that basing most of the fintech startups in the industry offer payment products and services, which is not bad, but other segments like insurance and personal financial management remain met. Again, high mobilization for the use of these services is needed in remote areas. And Furaha, technically echoes Norbert much of what you've been saying. We have another tweet coming in from Furaha, and Furaha says that basing on fintech solution demand, startups have not been able to unleash the latent demand for diverse financial products and services. Most startups offer payment products and services, but other segments like personal financial management and insurance remain unmet. Maybe during the course of the show, we'll have time to talk about startups and the Startup Act. I know that the Ministry of ICT just recently initiated a couple of weeks ago. We also have another tweet coming in, and this tweet is from PKK, who states that the future of fintech is bright. In reference to what the central bank reports, there is an increase from 4 to 10% in the mobile money use. Today, we can do a lot using mobile money, pay bills, purchase goods and services from their phone. And I know this spike came during actually the lockdown period, during that big migration to the cashless. To cashless payments. So the next aspect of the conversation is to look at the economic recovery fund and fintech. So reports that have been coming in from the central bank, state that there is a low uptick by businesses, specifically businesses regarding the economic recovery fund. As many of you know, this was put in place by government to facilitate businesses affected by the COVID-19 pandemic. Only 2 billion Rwandan francs has been approved for the working capital aspect of the fund. So there's a low uptick by firms regarding the second tier of this fund, which is to do with the working capital. Is a key cause of this lack of financial data by financial institutions. Norbert, I'm just thinking, is this one of the reasons? If there are other reasons, can you please share them with us? Can you try and explain from a fintech perspective, why is the uptake low? Why are people not accessing the fund? And what needs to be done to change this?
Thank you. I think this is a very significant problem that Rwanda is facing because the government, I think, did not put up this amount of money easily. It must have been quite a difficult decision to make. So it's not very understandable how then the businesses seem to not be able to take advantage of it. I cannot speak for banks, I don't work for them, but I can share some of the things that I've heard and what experience have been shared with me. So basically there are three important problems. The first one being that people, especially small businesses, as I said earlier, kind of resist using cash because of fear of taxes or other reasons, which are mostly unfounded, I would say. So this is something that can be solved through education, through mobilization. The second reason is that people are indeed afraid of taking loans because sometimes when you're talking about somebody like a kiosk owner, they might not be that literate in finance and they might just know the basics of what to do with their shop, and they would be afraid to take a loan because they think it might be risky, and that's understandable. I mean, it's normal for people to be reluctant to take on credit, but credit is good when you have the right reasons. So this is again something that can be solved, I believe. But the last part is really the lack of a track record or the lack of proof of economic activity, which is again comes back to the first items that I said. And I've heard on TV and in some instances people complaining that they did actually fill the application, but the application is taking too long, or they've been asked to do collateral or some other supplementary documents that they have to give, and it's taking too long. So I think this again shows that we are still lagging behind in terms of fintech, because the way that this should be done and the way that the technology has proven elsewhere is that once the ecosystem, the e-commerce or digital economy ecosystem is mature enough, then it is quite easy to show that you have incoming orders, or that you have had these many transactions, or you have, if you're a restaurant, this is how many people come to eat here every day. If you're a kiosk, this is how much money I make every day. Then that would really make it much easier for people to access loans. And ultimately, I think that loans should be automated. At least that's the natural evolution of where Spain is going. When I was saying earlier that we will be offering this kind of services soon, is that for us we're going to be we're not going to involve a single human being in the process. And it's not needed, because once somebody gets their salary paid on spend, for example, then it's very easy for us to allow them to automatically get a portion of their salary, and then that will be paid back at the end of the month when they get paid. So that does not have to involve any human element, and this will of course eliminate many problems, including what maybe Bernard talked about, that women don't have the same access, or what we have heard about corruption of all kinds. So the Economic Recovery Fund is quite a pity that is not going as well, because many businesses actually need it. But why they are not doing it, I think, is a testimony to where our fintech and in general our economy is in terms of digital economy. But it's not, I'm not saying that this is a very negative, because we've come from so far. And what people need to understand is that for fintech to thrive, of course, you need to have e-commerce. So one good example for Rwanda, I would say, is that the partnership with Alibaba, for example, has allowed us to not only train programmers, but also educate the government officials and work to create an ecosystem. Because if Spain was to act alone in Rwanda, we would not achieve anything. And I would say the same about most tech actors. So it's something that will take some time, but we are on the right track, and I think we are progressing much faster than we should. But for the Economic Recovery Fund, I can only say this much because I'm not really a banker, so.
Thank you very much. No, but Bernard, do you want to weigh in on what he said? How can fintech really boost the uptake of businesses accessing the ERF?
I think that we have a lesson to take from the low uptake, because we know that the demand is there.
Of course.
The demand is there for this money. Businesses need this money. So we need to find out why. Now, I think part of it, again, if we go back to how a traditional bank would go through a loan application and process, the amount of paperwork involved, I think for most businesses, of course, they would not qualify. Secondly, I think it also shows us something about our taxation system, because among the requirements was that you had to have a tax clearance. So perhaps not as many businesses as we thought have tax clearance, and I can tell you it's quite difficult to get one. Third, I think it also speaks to the informal sector, because when the fund was set up, I think the thinking was mainly around, and Charlie, you may recall we discussed this, the thinking was around bailing out the big businesses. But again,
hotels,
if we, yes, and yet when we go back to the structure of our economy, we really have many small businesses, family enterprises, small household, businesses that are the backbone of our economy, that are the ones that are employing people. So perhaps we need to rethink the whole funding model and try to make it more accessible to even the small businesses, So I feel that, again, it exposed some of the other problems that we have, but then again it's good because now we know. because I've seen people saying there was limited awareness. I wouldn't think it's as much as, it's not awareness really, it's complying. If you look at the list of requirements, they are targeting formal businesses, yet we have so many informal businesses, you know. The other thing I feel that, again, going back to fintech will need a lot of government help to, you know, to be able to fast track progress. For instance, and again, it's difficult because there's a lot of risk around this. It's taxpayers' money, so you have to be very careful in terms of how you disperse it. But I think we have to find a way around addressing the risks around fintech, because I think most of the time the reluctance is around risk. The tendency is to work with more established businesses because they've been around, they've been tested, and fintech really has been around for just a couple of years. So I feel government has to give them a leg up. Even with this fund, try to experiment a bit of it and see how, for instance, some micro loans can be made available. The other thing, for instance, if some of this money was made available via mobile money, I think we could have some small businesses access it. So we need to rethink.
Absolutely. I really like the points you raised in exposing some of the structural frameworks of this fund, going back to the drawing board and rethinking how it can be made more accessible to an informal sector that really drives this country's economy. So thank you very much, Bernard, for those inputs, and Norbert as well. Charles, what's your take on this before we go back to our social media feed?
I think it's not very complicated, and I'll give a few examples. Well, we do have the structure problem that a lot of our businesses are informal in nature. But when you look at simple tools like Imihigo, you will see mayors saying we moved from 80,000 people who have mobile phones in our districts to 120,000, and that is an indicator of growth. You will see a lot of programs around sending awareness on cleanliness and hygiene and all this on mobile phones. So the mobile phone penetration is fairly good, I must say, and it's something that is very deliberate and emphasized. Absolutely. So if that is the case, can you imagine if tomorrow the government woke up and said, we are not going to take any more Mudugudu fees for security, all these cleaning fees in cash? If KVCS that collects parking to tomorrow woke up and they were told that stop taking cash, if well, I think with motors they have that little device, but it's not compulsory, right? On the bus, I know is where it's compulsory. But trickle down to the mama mbogas whom we buy from, fruits and vegetables in the markets, because they all belong to a fairly formal setup. You just can't go and sell in the market. Absolutely. If you don't belong to an association. Yeah. Those associations belong to cooperatives. So you go to the cooperative and you tell them no more taking cash and so on and so forth. The direct impact it will have across the entire market is that the likes of Spain and all the other mobile operators would be able to have access to critical data of how many people are actually using mobile money and the related services, and then therefore be able to offer micro loans and so on and so forth. And
have information credit history.
Yes, because I think Norbert will probably know this better than I do. But in their world, they have what they call API. API is basically a system where you as a fintech, you have access to a banker's data, and then the bank in reciprocal has access to your data as a fintech, and then therefore through that trust, you're able then to sort of exchange information that benefits your mutual clients. But I stand to be corrected if I did not explain that in a pure layman's terms. But I believe, to the best of my knowledge, that's what it means. So when that trust is built, then the fintechs are able to think out of the box because they have access to data on how many people are using money in across their different platforms. So I think the only way to go about this is to not be casual. Of course, there will be a lot of resistance.
To be deliberate about it.
Yeah. We need to be extremely deliberate. There will be a lot of resistance because the moment I send Bana mobile money, then her future husband will know that we are communicating in one way or another, and then that may problematically be a question, an issue. I mean, and then we'll probably know how bribes are exchanged and what have you. Sure. Yeah, so there will be resistance, but in the bigger scheme of things, we have to be a bit tough if we are to yes.
Absolutely. I just want us to quickly go to our Twitter feed. We have a tweet from Maureen, and then we'll also read one from Peace and Wilson. So the first one says, from Maureen, says that fintech has challenged traditional structures and created efficiency gains by opening up the financial services value chain. It is such a technological enabler in the region, which has improved financial inclusion. It's serving as a key catalyst for innovation in agriculture and infrastructural development. Spot on, Maureen, with your insights that you've just shared. We have another tweet coming in from Wilson. Wilson Williams, he states that this is a very interesting conversation, and he says a quick one for Haguma. Has the regulatory environment been responsive enough to spur innovation in fintech in Rwanda? The other tweet coming in from Peace Uwase is actually to you, Berna, and Peace states that, correction, Berna, the Economic Recovery Fund was not designed to only support big companies. The fund has several windows, hotels, big and small, as long as they're registered with RDB, and 50 million was set up for them. I know a big portion of that has already been taken up. And then the working capital support for large companies, as well as working capital for SMEs. I think this is something that we know. Brenna, you were saying that we just need to relook at how this can be made accessible in terms of the compliance levels to really try and have informal, businesses also be included in this particular fund. And then we also have another tweet coming in from Maureen stating that, if you could have this on the screens, please. With reference to regulations, it is important that fintech providers work together with governments, regulators, banks, and customers to come up with appropriate measures for combating financial crime while raising industry standards. Big points there when it comes to financial crime and, cyber fraud. I know in the past, last year, when we talked about one of the banks that was, had cybersecurity cases. If you remember, we talked about this in Square. So that's something when we look at fintech, it should go hand in hand with cybersecurity. No, but very quickly before we close the show, what is your response to Wilson, who asked about the regulator and whether there's incentive for innovation in the fintech landscape in Rwanda?
I think Rwanda stands out as a quite startup-friendly country, but we are even working on a new Startup Act, which I think will take us even further. The regulators, so Central Bank for FinTech, introduced a sandbox regulation a few years back, which allows any company bringing any technology, including blockchain and others, to come and experiment with certain limitations before it's being launched. And even Spain launched first in Rwanda before going to other countries because of the regulatory openness, I would say. But what regulation cannot fix is capacity, and I think that's where we still have some limitations, and that's where we need to put more efforts. So we need to create an entire industry, a digital economy industry, and we need to start thinking about everybody that is involved. One example I would say maybe as a closing argument is cooperatives and savings groups. That is, I think there are 5 million Rwandans who are part of cooperatives, and they're all paper-based. There's more than 10,000 cooperatives in the country. They're all paper-based. That is an economy of, I think, in the tens of billions of Rwandan francs, which would allow so many people to be, banked or to be included in the fintech industry. And again, when you look at what we were saying earlier about about the informal sector not being able to get access to loans. I would disagree with Charles in the approach, in that we have to compel them. I think that if it was up to me, I would direct a lot of that money, first of all, to the companies that have gone digital, because it is the future, so they need support. And secondly, I would spend a lot of effort encouraging others to also move in that direction, which would help. So, when again going back to cooperatives, one of the favorite projects I see out there in Kigali is a cooperative.rw, which allows people to be able to get together and create a cooperative and run it digitally and be able to give and receive money to each other and things like that. So for me, that what really makes me happy when I see projects like that, which do inclusion in such a drastic way, such a transformative way, and do it at the grassroots level, thinking about the people in terms of exactly what tools they have, because you cannot bring an app-based solution to somebody who doesn't have a smartphone, so you need to find ways. But I think I could go on for a very long time.
Thank you, Norbert. We've come to the end of the show. To our viewers, thank you for watching. Keep the conversation going using the hashtag the Square RW. Thank you to our viewers of partners Uzi Collections and Bourbon Coffee. See you again next week, and thank you for tuning in. Have a good night.